Well, we're going to open up a bull or a bear tomorrow. Let's see what the coin thinks. Well, that is a bear. And if you wondered why the coin sounded slightly different, it's not on my glass desk in my office. It's where I'm actually in the showroom downstairs. Wow. Watching people walk by on this 91 degree 7:13 p.m. evening. But man, it's just absolutely lovely out there. Even at 91 degrees, you got to love the weather here. Take a look at that. That's the beach that's live right now. And I'll probably see some people. I'm only a couple blocks away from this beach. Some people walking by. Yeah, they look like they just came from the beach here. And nice night, 91 degrees, despite the 91 degrees. It's really beautiful out there. Well, let's take a look at tonight's quote. I kind of picked this up here real quickly, and it's the bankers. And I'm not sure who Chris Martenson is. I probably should look before I start quoting people. You never know. But the bankers and financiers are badly overplaying their hands again, and people are starting to catch on to the scam. Real wealth is tangible things produced with tangible effort. Loans made out of thin air money require no effort and are entirely ephemeral. Excuse me. But if those loans are used to acquire real ownership of real assets, then something has been exchanged for nothing, and one party is getting screwed. All right? Loans are used to acquire real ownership of real assets, and something has been exchanged for nothing, and one party is getting screwed. Think about that, folks. Very powerful statement, quote by Chris Martenson. And again, not quite sure who he is, but man, he nailed it on this one. Well, let's take a look at the spot prices here. And what do we got going on with spot prices out here? Man, sub $19 silver. I just didn't think it would be so blatant. I just did not think that the COMEX silver, the Crimex markets would just be so overtly blatant, knocking the price of silver down like this with the big commercial short positions. But they're past the point of even trying to hide this shit, folks. There's something weird going on out there. The other thing, too, is just the sentiment in silver is just at a dead low. I haven't seen it this quiet in such a long time. I'm going to go over a couple cool things. There's a good article I want to read to you about price manipulation in the markets, and not the normal stuff that we talk about. Good article that is by Mr. Peipenberg. We've read his articles before. I think he's from Gold, Switzerland. And I'm also going to read over the current spreads right now, because I tell you, there's one thing. Listen, if I had a crystal ball and I had the ability to tell every one of you, well, I'd make the trade myself and then everyone would know. But if I could make you all rich by having a crystal ball and telling you exactly when to trade and when silver would be on sale, gold would be on sale, real estate would be on sale, all these different products would be on sale. When that was going to happen, when to load up and when to unload. If I had a crystal ball to tell you that, I would. Because if I had a crystal ball on this one, I would say that at this sub $20 level, it's a frickin' steal. Again, the problem with markets and any markets, I don't care what market it is, it's all markets, is it doesn't tell you when they go on sale. Oil doesn't tell you when it goes on sale. Real estate doesn't tell you when it goes on sale. Silver doesn't tell you when it's going to, not that it's on sale, but when it's going to go on sale. It's hard to predict exactly when you're going to see these markets get monkey hammered, slammed, or whatever it may be. And I'm under the belief that all markets are manipulated. I don't care if it's real estate markets. I don't care if it's, I don't care, but regardless, I believe that all markets are manipulated somehow, some way. At one time, I believed that we had what I would think is a free marketplace where supply and demand is what really dictated what the prices were on markets, especially in commodity type markets, real estate, whatever you name it is, whatever it is. But if you really think about it, what created the real estate bubble back in '08? It was artificial interest rates, created by the Federal Reserve, and it was a government policy to make sure that everyone owned a home. If you remember, loans, no document loans, where you could get a loan just by saying, yeah, I made this much money and I can afford this payment. So these bubbles and these type of situations in these markets are all either created by manipulative big corporations, or, and again, I'm such a free marketplace guy that it just disappoints me to no end to realize that we've allowed ourselves to get in this type of situation. Where have I been all these years? You know, I got to tell you that I've always known that manipulation exists, and especially, let's talk about the silver market. In the silver market, for example, I've always known that manipulation exists in the silver market because I've seen it get hammered so many times, unexplainable events, and fortunate for me, and yourself and other people, we've got a lot of smart people out there that are absolutely showing us how these markets are manipulated, including silver. Ted Butler is one of them. I think he's one of the brightest guys out there when it comes to explaining how these silver markets are manipulated, who does it, how, and he's got the data to back it up in the COT reports, the very same reports that are put out by the CME and that they rely on, and that they totally ignore that these people are manipulating these markets. And Ted Butler brings up a very valid point when it comes to these markets being manipulated. The CME group, COMEX, they can't admit that they're manipulated and there's collusive behavior. They can't admit that in any way, shape, or form. It opens them up to big litigation and potential criminal charges as well, depending on how far a prosecutor might want to take it. So you kind of see where we're going here. But the markets are so fucking rigged. They're so in our faces. Think about oil. Think about the fact that I mean, look, Biden goes in there, he releases emergency oil reserves in the U.S., which really doesn't do nothing to help the oil situation or the inflation situation. It's kind of like a gesture that maybe help keep him in office a little bit longer. Doubtful, and highly doubtful, actually. But no less, that's kind of like jumping into the market. That's a blatant manipulation of the markets by the government, just going in there and releasing huge reserves of oil to drive the price down. That hurts the investors that have invested on the long side of oil. But no less, let's move into the secretive side of governments dropping down the price of gold. And I don't believe that happens in the silver markets, and Ted Butler doesn't also. And again, I follow Ted Butler. I talk a lot about him, but I think if you Google him, you'll see that when it comes to silver manipulation, he's probably one of the smartest dudes out there. And silver's the market that has been really monkey hammered by these scumbags in COMEX. So, and if you want to, again, he knows about that stuff. He talks about it. Gold's a whole different animal. Gold, the price discovery on silver is primarily in the CRIMEX markets, the CME group who owns NYMEX and who owns the overnight Globex markets, where silver is primarily traded and where the silver price, the discovery price of silver is made in that crooked frickin' market. And again, we know what happens to that market. It's big collusive commercial shorts that CME group allows to do this. Here, I'm going to just kind of put little quotation marks in here. It's strange. There's some strange stuff going on. I think that stuff is kind of about to end. I think it might have something to do with the LME short position and a lot of things, undercurrents going on in the market. A lot of these long positions that were the opposite of these collusive commercial shorts are starting to discover they're being played, perhaps. Perhaps the CME group is starting to discover that, with the JP Morgan guys getting convicted, that if the JP Morgan guys get convicted, that opens up a couple things. If they take criminal charges, and there's a big court case going on with JP right now, if they get convicted of this, that opens up the CME group, and it also opens up JP to potential, well, not potential, but definitely lawsuits for sure, because people are going to say, well, you allowed these traders to work for you, and they screwed me on their trade that I had with you, so you're liable for this since they work for you. So JP Morgan and I really believe the CME group have great interest in making sure that these JP traders aren't convicted. And I think that goes to a lot. But I do believe that the CME group is starting to see the writing on the wall. Maybe they're changing things internally, trying to force some of these big commercial collusive shorts from stop doing this. Maybe the big collusive shorts are also looking and saying, hey, look what happened to that big silver, I think there's a lot of things going on out there. Meanwhile, they are really putting the monkey hammers down on the price of silver, perhaps just to exit these short positions, as Ted Butler suggests is a possibility. But you know what? I don't want to digress too far. I want to talk about premiums and what a great freaking deal that these metals are right now. And the premiums are reasonable. However, I am starting to see some shortages in product in particular types of silver, like 1 ounces and 10 ounces, which tells me that the manufacturers are probably, or there's big demand for smaller products, for the 1s and 10s products. For whatever reason, the masses are buying them. You know, really, when you start to see 1,000-ounce bars and 100-ounce bars, the premiums for them to go up, especially 1,000-ounce bars. When premiums for 1,000-ounce bars go up dramatically, then you really know that there's a physical shortage out there. And as far as a silver shortage goes, I always talk about silver shortages, but when I talk about silver shortages, I'm not saying that there's a lack of above ground silver. There's what I do talk about, and many others talk about smarter than me, that there's a lack of available, get keyword, available above ground silvers. There may be billions of ounces of, and there is, I'm sure, of silver above ground in private hands, public, public hand, whatever it may be, corporate hands, whatever it may be. All right, but what is available for sale? And another thing that we're seeing at these lower prices, like 1893 silver, folks, the silver buying, which surprises me, is slowed up dramatically. And it tells me two things. So first off, is that people are kind of shell shocked. They're wondering if it's going to go down further and when the step-in point is, especially seasoned buyers and people that have more money. And there's other people that just are already bought in at higher levels and maybe lower levels, and they're just watching this with amusement and thinking, wow, I wish I had a couple extra bucks on me. And then there's the new buyers that are, again, nervous stepping in. They're seeing a dropping market, and they're not going to step in right away. And I'm talking about physical people. I'm not talking about the criminals in the CME markets and the futures markets and those markets. I'm talking about the physical buyers. So I have seen the lowest amount of buyers on silver than I've seen in a long time, which tells me that sentiment is a really low on the physical side. And I think there's two reasons for this. Again, lower prices have frightened certain buyers, especially newer buyers, and seasoned buyers, wondering if it's going to go a little bit lower. But one thing I have not seen is capitulation of any retail physical sales. No capitulation. In fact, I haven't seen capitulation since 2012 when silver went from... Silver people are strong hand holders. I mean, they hold their shit. They don't just sell, they accumulate, they stack it, and for some reason, when they do take hits, they just say, frick it, I'm not selling it, I'm going to stick it back. I got to say one thing about silver investors: stubborn, and that's a good quality in this case because they're not capitulating. I haven't seen any retail capitulation in silver sales whatsoever. But what I have seen, folks, is a big drop in silver purchases. And that's to be understood for, again, two reasons. We're in the summer doldrums right now. People are having their summer fun, and it happens every year in the gold and silver markets, except for 2020, where everyone had a 1 year of summer, a 1 year summer vacation, so to speak. But again, summer and sentiment, I think people are just waiting to see where these crooks were going to fucking take these markets. All right, 1846 platinum. 846. My girlfriend is going to be buying platinum here very shortly. She likes this. She loved it at 900. I think she likes it even more at 846. I told her kind of let's wait till tomorrow and see what happens. But I think there's a buy-in point here for her. She's going to cost average lower. And of course, I'm cost averaging lower in my inventory at silver by buying at these $19 levels too. And the premiums are sweet for me and the new buyers that are stepping in. Gold holding its own pretty good at 1726.03. Let's do a quick gold to silver ratio here too. I want to see, I bet that's up quite a bit, which tells me, gold seems to be holding on this 1700 plus level. And remember, gold is manipulated primarily by central banks and by the Bank of International Settlements, according to GAT.org. We'll get into that in a second. But gold has been holding its own pretty good at this above 1700 level. Will it touch below 1700? If it does, I don't think it'll last long. It'll be temporary, real short, and then it'll pump up, again. Uh, again, folks, you silver guys out there, wherever gold goes, silver will eventually follow. Let's see what the ratio is right now. I think it's much higher than the 90 to 1 we've seen this last week. 1,726.03 divided by 18.93 equals.
It's approximately 91.1796.
Okay, we're up to 91 to 1 right now in the gold to silver ratio. And if silver continues to go down, but the funny thing is both metals have been going down in this 90 to 95 ratio equally. So a lot of strange stuff going on. It's hard to explain. Let's take a look at the 24-hour charts and see what's going on there. I'm going to take a quick sip of, yes, it's wine. I know. It's not the coffee morning. It's wine evenings for the summer and the spring that we've had. I'll be back to coffee mornings at some point. One sec. Trader Joe's does a pretty good job on their regular wines there. Anyways, let's take a look at the charts. I think I just refreshed that. Yes, I did. There's our line right there in gold charts, 1735, bouncing around some 1735, but between the 1725 and 1735 range, it looks like, it just feels like that they're going to try to drive this price down close to that 1600 high 1600 mark, 1700 mark. Will they get there? I don't know. But again, never underestimate these crooks. And this is not primarily Crimex. I believe, again, this is central bank crooks and the BIS in combination, probably with COMEX markets as well, that drive the gold markets down. And we'll get into that article too. Why would central banks, why would the Federal Reserve want the price of gold down? Good article that I'm going to read here shortly and make this, God, it's going to be a long video tonight. Well, not too long, but take a look at the markets, kind of sideways, but drifting down. This is kind of what we've seen for the last month and a half. I don't even recall when the downward travel began for gold and silver here, but I think we might be testing some little bit lower levels here in gold. But again, I can't see much below that 1700 level. A little bit, but not much. Silver, man, boy, they're pulled all the stops out to monkey hammer this market down quite dramatically. Take a look at where we're at right now, sideways in this 1890 to 19 range. Will they take it much below 18? Tough to say. There's some folks out there thinking $15, $12 impossible in my point. If it goes to $12, you just know that total market is totally fucking broken. That not broken. When I mean broken. That the price discovery is just fucked if it gets to that $15 or $12 level. 18. Listen, the price level is fucked anyway. The price discovery is fucked anyway. It's not real. It's fake. It's a collusion and manipulation by big commercial shorts in the COMEX markets. We know this. And how is that comforting to people that had bought in higher? It's not, but it's going to blow up in their frickin' faces, folks. It looks like we're getting to that part. There's just some strange stuff going on. All right, I'm going to move out of here because it just gets repetitive talking about them crooks. And what's happening to the other crooked markets out there, the Dow Jones, S&P, and NASDAQ? Everything down across the board. The darlings of the United States, the darling investments of the United States, the S&P, the Dow Jones, and NASDAQ, down overall. Looks like everything in the red, even the Bitcoin there down in the red at the low 1900s. Will she go sub 1900? What asset is performing in any kind of decent way out there? Go frickin' figure the U.S. dollar. What is the dollar index right now? And folks, this just tells you how much monkey hammering and how much manipulation goes on out there. Look at the DXY. We're going to take the dollar index real here, and I like to look at market. Look at that, 108.16. Let's just look at the 1 year chart. And does this have an effect on the price of gold? Yes, it does. This is all because of the jawboning of the Fed talking about quantitative easing, raising interest rates. The illusion that the dollar is stronger. It's not fucking stronger, folks. If it was stronger, it would buy more stuff. the CPI would be a whole different thing. What this indicates that the dollar is stronger against the other basket of currencies, the other bag of shit out there, the yen, the euro, and whatever else is in the basket of currencies. It's the last horse to the glue factory kind of scenario here, but no less. And this is the, I'm telling you, I believe that when this collusive and manipulative spoofing happens, and when these collusive shorts happen, you know, the spoofing especially is based, they do it when the logic of a stronger dollar would say, well, a stronger dollar means that gold should be down based on, you know, the formulas that we show, because the dollar is stronger. You don't, folks. I believe that the big spoofers out there, which are the big commercial banks and their minions out there, use dollar strength as an excuse to monkey hammer the gold and silver markets. Again, we'll look at Peipenberg's article here shortly that talks about that kind of stuff. But before I get into let's shake the sheets here. Shake the sheets. Another sip of wine here. Excuse me. Okay. Well, spreads. You know, listen, if you've already bought into gold and silver, then you've bought all you can, and you're waiting out these fucking ridiculously monkey hammered markets right now, and you're wishing you could buy in, especially if you bought at a higher level. Don't worry about it, man. Just fast forward past this page right here, and you know, and like I said, wait it out. You'll be fine. This is all about wealth preservation, and the fact that I do believe that besides wealth preservation, you are going to make a lot of money in gold and silver. Of course, that's just my opinion. When the shit finally does hit the fan, as far as a lot of different things. But what are the best deals out there? The best deals appear to be, I'm going to take a look at gold. Gold Eagles have gone up a little bit. I think about $5 per unit on the bid and ask side, wholesale, which means that they're going to be up on the websites and up by your local dealers if they're competitive. Stay away from gold 1/10 Eagles, quarter ounce Eagles, and half ounce Eagles unless you have to absolutely buy them. The premiums are still freaking ridiculous on them. What are the best deals as far as gold goes? I got to tell you, gold 1 ounce bars in cards and out of cards, which means that just gold bars, you know what I mean? You can get them for basically, what is my cost on gold bars right now? Generally in the spot plus $33 range. That's around the wholesale price right now. I usually tack on $45 to that. So if they cost me $33 over, my customers pay an additional $45 over for small quantities on gold bars. Those are the best deals. Gold Eagles, it cost me around $85 an ounce as a wholesaler. And again, you know, give or take $5, and I'm sure that's the wholesale range on them right now. As far as the ask size go, ask if I have to go out and buy them, I tack on $45 to that. So it looks like across the board, the premiums on some of these products has gone up, you know, quite a bit, especially in gold. And some stuff is just not plain available out there. Gold for harmonics, for example, if you can find them, you should be paying around the price of a Krugerrand form, but it looks like there's not much available out there. Gold Britannias appeared to be delayed in deliveries, but seem to be available as well. They're priced about the same as kangaroos, and Krugerrands are about $5 higher, but do seem to be available in the open market, as do maple leafs, which cost me about $58 over. I'm sharing some proprietary information with you guys on this, so and a lot of dealers won't be too happy about me sharing this kind of wholesale information. But profit's not a dirty word. You know, if I'm paying $85 over for a gold eagle from another wholesaler. Now, mind you, from the public, dealers do pay less. What is the current bid price on eagles right now? It looks like dealers are bidding around the $50 area. So across the board, the bids are up and your asks are up on wholesale prices on gold. Again, best deals out there are bars. As far as silver goes, man, 90% is still the wholesale bids. Don't expect to buy or sell at these prices, folks. I'm just sharing with you some proprietary sheets here that show the wholesale bids and asks. Wholesale bids on dimes and quarters on 90% is $550 on the bid, $675 on the ask. you know, with my customers, I like to make $1 an ounce, so I usually pay $1 an ounce less than the wholesale bid, $1 over, which puts me at about $4.50 on the buy side at 90% and $7.75 on the sell side on 90%. But here, best deals. Speaking of best deals, I happen to have a good deal on 90%. You can get it from me cheaper than anyone else. But you know what? It's still expensive, man. The premiums are still pretty high on it. There are better deals out there. Best deals, in my opinion, are 100-ounce bars and 10-ounce bars. No, I'm sorry, kilos and 100-ounce bars. You know, small quantities, we're getting plus $3 on kilo bars and plus $3 on hundreds, and that's a good deal. Looks like there's some product that may be some availability issues. 1 ounce products may have some availability issues right now. We still have plenty on hand here, but once we run out, there may be delay on 1 ounce generic products, which are running around spot plus $4 per ounce right now. So that price is up a little bit too. Looks like the premiums are increasing a little bit according to the new wholesale sheets here, folks. So kind of interesting stuff going on. Let's take a look at gata.org, what's going on out there, and you should have this bookmarked on your favorites bar here for sure. Hedge funds cut back trading after LME, nickel chaos. And again, this is why I think there's some strange shit going on in the CME group, below Crimex markets. I think they're looking at this, their traders are looking at this, obviously, and here you can read that this, you know, they are actually, the people involved in these markets are getting nervous because of that LME trade. And they're also looking at the CME Comex group and saying, you know, are these guys crooked too? And yeah, they are. Hedge funds have cut back positions in some markets that they fear could suddenly become difficult to transaction following the London Metals Exchange decision to avoid thousands of nickel trades. A lot of you folks are familiar with this. If you're not, just type in LME nickel default in Google and you can read all you want about it. So the LME's move in March to cancel 8 hours worth of trades. You know, they canceled 8 hours of people that were going to make a lot of money off that trade, folks. That's the crooked side of this, but they don't really go into that. Has pushed a number of hedge funds to reassess the risks they face across their portfolios from human interference, upending their positions, all right? The exchange stepped in to halt a squeeze on short, well, explains it for you folks that are not familiar with this deal. The exchange stepped in to halt a squeeze on a short sale and protect other users from heavy losses after the price of nickel soared 250% in just a couple days to $100,000 a ton. Folks, can you imagine if silver soared 250%? Nickel did, all right? Nickel did, and it almost destroyed the big collusive commercial shorts in nickel on the LME market. This is probably what's making the silver guys, the silver shorts, nervous, folks. 250%. They were in a major default. You know, if the silver comics market defaults with any of these big commercial shorts, there's two. You know, they have to do the same thing here. And again, big issues, the credibility issues with LME has just gone to shit. Kind of like, well, I'm not going to go there. Its shift provoked uproar amongst traders, not only because many lost out on the profits, but also because it left them with unhedged positions in other metals markets. The credibility of the LME just took a giant fucking crap because of the crookedness, and I think that the CME group is looking at this as well as their big collusive commercial shorts and saying, hey, listen, that could happen to us. This is why I think there's some strange undercurrents going on. Let's read the rest of this. It says Rotterdam-based quantitative hedge funds Trend, which trades global futures markets that manages $6.5 billion in assets, told the Financial Times that it had decided to stop trading on LME following the nickel debacle. It added that this decision had led it to running smaller positions in metal that it otherwise would have held. You know why? Credibility. They don't trust the LME markets anymore. And folks, I think that the COMEX markets are looking at the same type of scenario and maybe trying to prevent it. Maybe that's why silver's so low right now. They're allowing these big shorts to exit their positions at the least possible losses possible. Tough to say though. Purely speculative on my opinion. You know, purely speculative by me. But you know what? This opinion is not just shared by me. It's shared by people that are much smarter than me as well. Again, if you're privy to Ted Butler's new newsletters, he talks about this as well. Boy, this is going to be a long one. Let me take a sip real quick here. We're almost there, though. One sec. Not really. We're not almost there. Paper Gold Price Manipulation Rigged to Fail, authored by Matthew Piepenburg. Again, Matthew Piepenburg is a mother of another. I'm a brother of another mother. Gosh, I completely forgot how that goes. But I'm on the same page as this dude. He writes for viaswitzerland.com. I think they're an online gold place. You know, I'm not promoting their business in any way, shape, or form, but I do love what this gentleman writes and agree with him 100%. The current open fraud regarding the paper gold price in the comics market is now plain to see as the open desperation in the global financial system, which is unraveling in real time all around us. As risk assets tumble foreseeably into bear territory before a headwind of deliberate rising rates, precious metals have seen headwinds making falls as well. Below, we will explain why. And again, I want to read this to you folks because Mr. Piepenburg, what a wonderful job he's done on this. It's a good explanation and kind of a short article and explains why this is happening. Tracking, and he talks about gold primarily, which again is a different marketplace. Tracking the paper gold price is standard answer. In prior reports, we've noted that precious metals typically behave sympathetically when markets tank. Therefore, gold then surges north. We saw this pattern in October 2008 and March of 2020. Furthermore, when a hawkish Fed pursues a temporary yet face-saving policy of rate hiking and quantitative tightening, this makes the U.S. dollar the relatively stronger horse in the global currency glue factory. My gosh, listen, this dude just wrote what I've just been talking about, the glue factory, the race to the the race to the glue factory. And relative rise in the U.S. dollar, of course, is a headwind to gold. Explaining the paper gold price, the rigged answer. But let's go to the real heart of the matter, namely legalized paper gold price manipulation, i.e. fraud, in the COMEX market, a topic we've addressed more than once, and they're giving links here where they've discussed this. I agree with them 100%. As we've openly argued for years, nothing embarrasses an otherwise discredited fiat currency like rising gold price. Great statement there, by the way. And as I've described, rising gold prices are a middle finger to debased currencies whose declining purchasing power are a direct result of the failing and drunken monetary policies of central bank near you. All right. There's only one place that I might disagree with Matthew Piepenburg on this, is that he believes it's drunken, stupid policy. I believe that there's a possibility they know exactly what they're doing and they're driving this shit, the reset that we talk about, and that's possibly what they're doing. They're driving us into this possible reset, central bank digital currencies, that kind of thing. But let me move along here. I'm not sure the central bank is all that stupid given the amount of billions that they own and the algos and the programs and the experts that they have. Maybe they're purposely driving this market into driving everything into the ground purposely. But again, that's a whole different thing. And that's the only area I digress here. Let's continue here. Or as Ronan Manley more distinctly observed, gold to central bankers is like sun to vampires. And that, folks, is precisely why the big banks, under the direction of the BIS, are deliberate, and if law school serves me correctly, as well as, I love the statement, is fraudulently manipulating the paper price of gold. Boy, that's anyways. Facts versus manipulation. In the first quarter of 2022, we saw record prices of ETF gold, physical gold, and central bank gold. Even Goldman Sachs, head of commodity research, was targeting $2,400 of gold this year. Instead, the gold price has been falling as gold demand has been rising, right? And he points it out. Does that make any fucking sense? It doesn't. Exactly. The gold price has been falling as gold demand has been rising. And as I told you folks, with the price of silver falling like it has and gold, there's been no freaking retail capitulation. There's no physical capitulation out there. That's what tells me that these markets are completely fraudulent. But let me move along here. It reminds me of 2008 when mortgages were defaulting en masse, yet the ABX index for subprime mortgages was rising. In short, complete and temporary manipulations were going on behind the curtains of a few wayward banks, including Morgan Stanley. Today's gold behavior, And let me move that up here a little bit. Today's gold behavior, i.e. surreal manipulation. And man, Mr. Pfeifenberg's got it. It's so in our freaking face. It's surreal. It really is. It's no different and no less of an insult to the natural forces of supply and demand. Like I said, I think we're brothers just from a different mother. So I don't know. This guy thinks exactly like I do. He writes like I think, which central bankers have attempted to destroy for well over a decade. But the jig will soon be up in these markets of open fraud and Wall Street socialism. The paper price of gold in the horse's mouth. For now, in case you fear I'm just acting as a gold bug, this is what he's talking about. And I feel this way too. Let's go straight to the horse's mouth and examine the confessions and facts of open price manipulation in the precious metals markets. And I swear you really can't make this stuff up. It's just that obvious and distorted. In a recent article by Peter Hambro, and I read this and we talked about this a while ago, published by the British news site Reaction, a third-generation gold insider, Petro Pavlaska, I probably botched that. Bank Hambros made the open secret of paper gold price manipulation abundantly clear and incontrovertible. It's also worth adding that Mr. Hambros' entire life career was built on the heir to a banking dynasty, all too familiar with the inside mechanizations of the London bullion markets and London Stock Exchange. In short, when Mr. Hambro discusses price manipulation, it's worth listening. And Mr. Pfeifenberg goes on to believe, says the chart says a trillion words. More importantly, for those who prefer facts over human confessions of gold bug whining, the following chart from the U.S. Office of Comptroller of the Currency, OCC, clearly reveals the extreme extent by which just a handful of highly pocketed and central bank-supported banks like J.P. Morgan and Citi can use extreme terms of derivative-based leverage to short, i.e. keep permanent boot to the neck of the paper gold price. And again, this is what Ted Butler talks about in the COMEX markets with silver. It's a very same situation here. Notional amounts of precious metal derivatives that insured U.S. commercial banks. Take a look at this. They use derivatives, folks, to drive these prices down. It's fucking crooked. The price discovery made worldwide on gold and definitely in the silver markets on COMEX, CRIMEX markets is rigged to the nth degree. And it's so in our face, it's not even funny. That rising bar on the far right is nothing more than crime scene evidence, and Mr. Pfeifenberg is exactly right. And Ted Butler, if you're watching this, and I'm sure he's not, but, if I could show him this right here, he would have absolutely agree. This is crime scene evidence right here. Data, their own data that proves that they're criminals. As Hambro remarks, a long history of media and bank-supported misinformation has tried to keep a lid on the desperate attempts by just a small amount of Bank of International Settlement minion banks like J.P. Morgan and Citi to effectively prevent free market price discovery on the paper gold price. Again, we're talking about gold, and I believe the same thing happens, but more on a greedy, manipulative scale in the COMEX markets. Gold has more to do with the economy and fiats. Despite thousands of daily long contracts, buy orders in the OTC forward contract markets, if just 7 to 8 banks wish to use massive leveraging, rising the bar on the right that we saw up there, rising this bar, okay, to short the same metal, they can effectively fix the gold price via artificial manipulation of derivatives contracts to which only a small number of banks have access. Folks, it is pure, simple manipulation. It is pure, simple criminal behavior that's happening, same in gold markets as well as the silver markets. And it's all in your face. Yeah, of course, I encourage you guys to complain about this. Call call whoever. Call the COMEX, call the CRIMEX, leave nasty messages. It's about time. Anyways, let me not go there at the moment. All this open yet legalized fraud is managed by the central banks, namely the Swiss Bank of International Settlements. Oh my gosh. Boy, it's nice to live near the beach. I'm sorry, I got a little distracted there by some people walking by. Okay, wish I had a cam for you. As Hambro states, and as taken from a recent published article by Hambro, yeah, I was distracted. Since 2018, the Financial Stability Desk at the World Central Banks have followed the BIS for instructions to hide the perception of rigging of the gold markets, okay? Hambro further observes, with the help of future markets and the connivance of the alchemists, the bullion traders, yes, that includes me, I was deputy managing director of McCott & Goldsmith, managed to create an unshakable perception that ounces of gold credited to an account with a bank or bullion account were the same thing as a real thing. Very powerful statement here. If you want to stop and reread this, I recommend that you do. And much easier, old chap, you don't have to store or insure it. So there you have it, banks acting badly. All right. Wow, we got a little bit to go here, and why don't we fight the Fed? Let me see how far we got to go, and man, it's a while here. I got a lot to read. You know what? I think what I'm going to do is leave it at this, because this is really a good article, but we'd be here for another 20 minutes me reading this stuff. And I know you guys don't like homework, but how about suggested reading? Put this on your bookmark board, suggested reading. I know you can bookmark this kind of stuff. It's called Paper Gold Price Manipulation, Rigged to Fail, by Matthew Peipenberg via goldswitzerland.com. Again, I'd like to read the rest of it to you. I didn't realize it was going to take that long, but we need to kind of finish up here. And I would like you to read this stuff on your own. You can take your time, reread it. Again, highly recommend you read this article. Let's move into yesterday's video, which was Silver Long and Prosper, which really was about live long and prosper, my cheesy little meme yesterday, quote meme. And see if there's any questions here I can answer. I'd like to thank everyone that likes and comments in my videos, and all you subscribers out there, hit that subscribe button if you haven't yet. I really appreciate every one of you. Roger, Mr. Irvich says prices are dropping faster than... not really, Mr. Irvich. The prices are dropping... we're sub $20 right now, but not really that fast. It's been like, pardon the expression, the death of 1,000 cuts, but it's nothing to do with death. The drop downs have just been a lot of little hacks. They've been hacking it down 10 cents, 50 cents, 20 cents. It goes up 20, knock it down 50 cents, bring it back up 40 cents, knock it down another 50 cents, bring it up 40 cents. It's been these little cuts. Your gold is holding up very well, but I do think buy stocks that the potential for silver is far greater than gold. But gold is a fucking wonderful preservation of wealth. You can never go wrong with gold. But I do think that silver is a much better value and much cheaper, really. As far as the my speculative point of view, that we are going to see $50 silver as a norm at some point once they lose control of these markets, and probably a lot higher. Roof Time says get ready for that. No, I hope not, man. I really don't. Michael, what's up? Gary Wright, thank you. Fish Guy, I appreciate the compliment there. I don't mind being called Fish Guy. I think someone calls me Uncle Brian as well, and thank you very much. I know that's terms of endearment. So thanks for watching. Who's that? Jennifer, Tone the Breakdown. There's a gentleman that calls me Uncle Brian. I appreciate it. See, term of endearment, exactly. No worries there, sir. You have yourself a wonderful evening. Thanks for watching. Trevor, Blackie, I think you as well. Blackie, I just don't think we're going to see $12, $15 silver. And if you do, I don't think I'd be able to buy silver physical at that price at all. And again, if we saw silver at that price, man, what the frick is going on in the world? I can see us going down a little further than we are right now, but certainly not to those levels. Then again, we are living in crazy times. Who knows what we should expect? I wish I had a crystal ball. Thanks for commenting there, Blackie. Carolyn, thank you. Appreciate that. Appreciate you sharing your opinion as well, or your comments. Rasputin, nice to see you commenting there. Paranoia Data Store. Who sang that? What? Paranoia, Great Destroy. I should know that. Losing it in my age here, memory-wise. The Scourge says, enjoy the info. Thank you very much. And just sit back and watch the shit show, sir. I agree 100%. Here's some spammers. Let's just get rid of these guys. We'll do a quick remove, and there's another remove right there. So I do keep up on those guys there. Physical Silver, keep stacking there. JTB SK2. Tree Climber, what's up, dude? How you doing? Roman M. And Welco Services, Polar Bear. Hey, that's it. We're calling it quits right now. Think for yourself, question authority. And this is Brian Kuzmar with Commercial Rare Coins and Precious Metal in beautiful Lauderdale by the Sea. If you live in South Florida, I'm your go-to guy on precious metals, rare coins, and estate jewelry and some other cool stuff as well. Give us a call anytime between 10 and 4, Mondays through Fridays at 954-493-8811. happy to help you with whatever you need. If you don't live in Florida, folks, I can't stress enough how important it is to find a good local dealer. As much as I love APMEX, SD, and JM Bullion, I think they're reputable companies, and I do beat their prices for gold and silver, commonly traded products, not the overpriced shit. You really should try to buy local if you can. Don't buy online. Keep that money local. But no less, we do advertise to be APMEX, JM, and SD Bullion, and your local dealer should be able to do the same. Keep the money local, folks. Find a good local dealer. And if you live in South Florida, I'm your man. Good night, folks, and I'll talk to you tomorrow. Bye now.